Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money secrets corporations try to hide in plain sight. Today we're cracking open a report from PacifiCorp, and let me tell you, it has got some interesting numbers about how they make and spend their money. So, what is the big deal here, PacifiCorp? A company that provides electricity and energy services has released a report about some recent business activities. It might sound a little dry, but understanding these filings is like getting a peek behind the curtain of how big companies operate and make big financial moves. The main event we're looking at today happened around February this year. PacifiCorp announced they completed selling bonds. Think of bonds like IOU notes. Companies sell these to borrow money and they promise to pay it back later with interest. Specifically, they sold $400 million worth of these bonds with a promise to pay back at a 4.250% interest rate. These are called first mortgage bonds and they are due in 2029. This means PacifiCorp borrowed a lot of money that they need to repay over the next few years. Now, to make this happen, they had to sign some pretty official documents. One of these is called the 36th Supplemental Indenture. This is essentially a contract that lays out all the detailed terms and conditions for these specific bonds. It is like the rulebook for this particular borrowing deal, and it is between PacifiCorp and a trustee, which is a bank called the Bank of New York Mellon Trust Company. Now, this indenture is dated February 1st, 2026. To actually sell these bonds to investors, PacifiCorp worked with financial institutions. There is an underwriting agreement dated February 4th, 2026. This agreement outlines how the underwriters will help PacifiCorp sell the bonds and what fees they will receive for their services. It is a key document in making sure the money gets raised smoothly. Then there is the actual form of the bonds themselves, the first mortgage bonds. This is like the certificate that investors will receive, showing they own a piece of this debt and are entitled to their interest payments. And of course, like with any major financial transaction, there are legal opinions. Perkins Coie LLP, a law firm, has provided an opinion on the legality of these bonds. This is important because it assures investors that everything is in order from a legal standpoint. Their consent is also included, which means they're okay with their opinion being part of this public filing. So why did PacifiCorp need to borrow $400 million? Usually companies borrow money for a few key reasons. They might need it to fund new projects, expand their operations, refinance older debt that has higher interest rates, or simply to manage their day-to-day cash flow. For an energy company like PacifiCorp, which often has large capital expenditures for infrastructure like power plants, transmission lines, and grids, borrowing is a pretty standard way to finance these massive investments. While I won't bore you with every single detail like their specific phone number, it is worth remembering that companies like PacifiCorp are constantly managing their financial health. Borrowing money at a 4.250% interest rate is a competitive rate, especially in the current market. This suggests that investors see PacifiCorp as a relatively safe bet, willing to lend them a large sum. The filing also provides information like their employer identification number, which is like a social security number for businesses. This is important for tax purposes and official record keeping. Looking at the overall picture, PacifiCorp's decision to issue these bonds indicates a need for significant capital. It suggests they are investing in their future, whether that is upgrading existing infrastructure or developing new energy sources. The fact that they obtained this financing at a reasonable rate is a positive sign for their financial standing. Now, what is my take on all this? PacifiCorp is a large, established utility company. Borrowing money through bond issuances is a very common and necessary practice for them to fund their extensive operations and future investments. The amount borrowed, $400 million, is substantial, but not out of the ordinary for a company of this size in the energy sector. The interest rate suggests a decent credit rating, meaning they are perceived as unlikely to default on their obligations. However, there is always a flip side. More debt means more interest payments, which can strain cash flow if revenues don't keep pace or if unexpected costs arise. Utility companies are also heavily regulated, and changes in regulations or energy policies can significantly impact their profitability and future investment plans. Plus, with the ongoing shift towards renewable energy, PacifiCorp, like its peers, will need to continue investing heavily in transitioning its energy portfolio. This bond issuance likely plays a role in funding that transition. In conclusion, this report details a standard but significant financial operation for PacifiCorp. They've successfully secured a large amount of capital, which is crucial for a company that runs massive infrastructure. The key for them will be how effectively they deploy these funds to generate returns and navigate the evolving energy landscape, all while managing their increasing debt obligations. Alright, that is our breakdown of PacifiCorp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description below. Thanks for watching, see you next time.